Joined now by Blaabjerg, Chief Equity Strategist at Saxo Bank. Thank you so much for speaking to us. So let me start by putting that question to you, that this European plan doesn't actually resolve the debt crisis in Europe, it simply buys us time.
Well, obviously it is buying the EU, the Eurozone countries time. But what needs to be stressed is that you cannot resolve the debt crisis by issuing more debt or putting up guarantees. What you need when in this grace period is to come up with a comprehensive plan on how these countries should reduce their debt. And if this is not pulled through and implemented, markets will come back and test the will of ECB/EU as to whether they'll sort of support themselves in a time of crisis.
Do you see any signs or any indications that some sort of comprehensive Eurozone-wide plan is in place to reduce these deficits?
No, not actually. What is disappointing is that you have had these very, very significant measures, both by the ECB and the Eurozone member countries published yesterday, but there was no time indication as to when a plan on especially Spain and Greece and Portugal how they should reduce their debt. And as such, I think they'll have until this week, maybe in the next week also, and then markets will definitely push for a plan. As we've already seen this morning, euro dollar is back in trading 127.40, 127 in that range. So after being up and trading 130 yesterday, so markets...
We have had some pretty broad-based pledges, certainly from Greece. They have made some solid commitments to cutting their budget deficit, to implementing austerity measures. We've seen similar action being taken in Spain and Portugal, but that's not enough, right?
That's not nearly enough. I mean, just look at the Central Eastern European countries. Romania published Friday last week that they'll cut public employees' salary by 25%. If you look at the Greece measures, they're not enough. They need a 4% surplus long-term for being able to sustain, service their long-term debt. And currently in 2013, they'll have a budget deficit on 3%. Likewise in Spain, they were out saying yesterday they'll cut their public spending by 0.5 percentage point this year to 9% of GDP. I mean, it's not even close to being enough.
So, I mean, if we look at what's been happening since the European plan was announced, we saw stocks soaring in the US, Europe finished higher. Asia markets were doing fairly well, though they are trading lower now. What does this all mean? Has the European sovereign debt plan taken the panic out of the market for now? I
think it has. I think it's fair to say it has. I mean, we have a very significant rally yesterday. We'll most likely have a small retracement this morning, but throughout this week, I think we'll be in positive territory as regards risk, that is equities and FX crosses related to risk. But the point is, markets will come back and test the will of ECB/EU if these plans on how to deal with this enormous debt. By the end of this week, I think it's fair to say the markets will come back and retest the will of ECB/EU.